This is the USDCAD on the 15 and I've just got involved with a low and tight flag. Now I've got a very good reward to risk here because I've got the optimum entry based on my rules. That's what I like to see. I usually have a 2 or 3 to 1 reward to risk. I've actually had 4 of these over the past week, 4 trades taken, 4 trades won. I don't think I got the optimum entry on any of them. I was late to all of them, but all 4 of them nevertheless won due to strict rules that I have regarding these patterns. So just before we go into the pattern, as usual, let's do the higher time frame analysis and then I'll talk through the very specific rules I have for these patterns. If you've seen any of my videos of late, you'll know that I am waiting for some big breakouts to happen here. All these breakouts break out bullish, and we do have a big head and shoulders here as well. So everything at this time is saying bullish, bullish, bullish. Of course, that is the daily time frame. What happens on the 16-15 can be completely different. So here on the 240, we have just violated this level of consolidation, and we violated it with momentum with this big bearish candle just here. Lovely 240 candle. Did that come into structure? Well, if I leave a structure level on there, no, there's no decent level of structure here. Let's drop to the 60. Here on the 60, you can see that we violated with a couple of candles and we are moving sideways. This sideways movement, after we have momentum candles or directional movement, where I'm personally always looking out for those breakout patterns, either a continuation or if it's major structure, stop and reversal like a double bottom or even a head and shoulders. Now, I need to bring the structure level down to the closes of the candles and we again look for structure. Now this time we do have a level here. Of course we could actually draw on another structure level, which is where price actually came to. It's probably a better idea. It gives us a better indication of where price stopped and where it went to. And there's a little bit here. Okay, so there is an area there. Let's drop to the 15. Okay, so the question I actually get asked all the time is, how do I know this isn't a double bottom? Because looking at this right now, the majority of people will say this is a double bottom. They may be right. The fact is we don't know if it is or isn't a double bottom. The way I work it is that I have rules which I've tested for a double bottom, and I need structure, psychological numbers. I need the market to maybe be in trend or in the direction that it needs to be at a key level of structure, maybe higher time frame analysis, higher time frame structure should I say. And if we don't have that, but yet it meets all the rules for the low and tight flag, then I trade it based on the low and tight flag. Okay, so sorry I had to pause the video for a few seconds, say good night to the kids. It is quite late after all, it's 9:45. So if it isn't a double bottom that meets my rules, because we don't have it coming into a major level of structure where I would assume that price is going to hold, then I look to see if it meets the rules for the low and tight flag. And instead of having the structure level at the bottom, I'm going to put it at the top. And if we look left, now we see a completely different story. Resistance, 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 resistance. Let's go further left. What else do we have? Support further left. Go a bit further, bit further, bit further. Okay, so plenty of areas there, and this is recent structure as well. Recent structure is always going to be more powerful than historical structure. So if we're reading pure price action, we've just violated a major level of structure. 2, 3, 4, 5, 6, 7, 8. An area here that's been tested 8 times. We've violated it with momentum. We've then violated this support level. We broke below it and we came up and retested it. Resistance. We've come up and retested again. Resistance. So now this is looking like a low and tight flag. We need a minimum of 4 touches. Well, we've got them. We draw this out on the closes of the candles. We have a directional move, and for these low and tight flags, they are significantly more profitable when we're in trend or when we've just violated a major level of structure like we have done here, and this is a very directional pole. So the next thing we need to know is, do we have room to come lower? And yes, we have these levels of structure here. This was a pattern in itself, looking like this. Breakout pattern which broke to the upside, and we're just coming down to retest this minor level here. These bigger areas further down is what interests me. So do we have room to go lower? Well, we throw a fib on from our swing low to our swing high. Oh, I always like to keep the charts clean, so we only leave on the fib that I want, which is the 127. Scrunch this up a little bit so we can get a better picture. And you can see then right here now we've actually had a lower close. So my entry here actually was just the red candle, so I need price to come up. I need to see structure held. I then need to see a red candle, and we've had two, and one of them was a lower close. So if I bring back on the orders, stops, just go an ATR above the high plus 2 pips. So I'm going to make sure this is in the right position. That's 1 pip. And targets then are 3 pips above that 127 psychological number. It is late, so you do want to be careful of that 2200 hours changeover here in the UK. Different if you're in America, but come 10 o'clock, that's when the fees all go a little bit skew-whiffed. But a very nice 3-to-1 reward to risk here. And we're back for an update on this trade. Just let me go to the right time frame, which was the 15. And in the night, we came up for a weird spike, but if you actually look what happened, we actually held structure. We just had a bigger spike than normal, which took me out for 10 pips, and structure has been held. This trade is still valid, and I've got to say that even though we were stopped out of this, I've entered in again with stops this time just above the high here, because this is quite a large spike for this pattern, and this is these patterns are very profitable when they're set up within this time frame. So I am still expecting the market to go down and hit those targets. I'm front running by 3 pips. Stops have just gone a couple of pips above the highest point here. I'm actually going to go 3 pips above the highest point. So instead of 10 pips, we're now looking at a risk of, see if we can get this right, 13 for a reward of 27. Could I have had my stop further back? Yes, but my rules are 5 pips above the high for this type of pattern. In actual fact, 5 pips is just here. They were not hit. However, the spread took me out, so but I'm back in the trade again. And we're back for the final update, and as you can see now, price has rallied down. I don't want to brag, but this does make 5 for 5. That is 5 low or high and tight flags taken, 5 of them won, even though I was stopped out 1 pip early. My stop, just to confirm, I think was at 51s just here. The spread got me, but nevertheless I used the 5 pips spread on the lower time frame because it's the most profitable for me, and I should have actually given it 2 extra pips because it was a nighttime trade held over the night. So I lost 10 originally but banked 27, so that is profit of 17 pips. So very pleased with the outcome, even though better judgment I could have used there. Hey, one of those things, but lovely 27 pips banked.